Beyond the Bell, Bloomberg's comprehensive cross-platform coverage of the U.S. market close starts right now.
About 2 minutes away from the end of the trading day, Katie Greifeld and Scarlet Fu counting you down to the closing bell. And here to help take us beyond the bell, we have global simulcast. We're joined now by Massar and Tim Stenovec, bringing together all of our audiences. I could go through the list, but I really want to talk about Carol. This
everywhere.
If you're watching us, you know how.
Rally. The S&P 500 up 1.8%.
Yeah, we've been seeing, it looks like we're just rolling over, but I was just seeing, a moment ago, it feels like there was more buying into the close here. Yeah, you've got most of the names in the S&P 500. We went through the 200-day moving average. So pretty remarkable that it is so broad-based and investors, certainly on the equity side, Tim, risk off.
Yeah, up 4.3% just in the last 5 days.
Risk on. Risk on.
Risk on. Okay, that's fine. Up the most since May of 2023. Scarlett, it's actually the highest, what's interesting value-wise, only in the last 2 weeks, going back to October 17th.
Yeah, that's a good point, but it's been up and down quite a bit. I was looking at how even the Russell 2000 is participating in this, up 2.6%. Brent Schutte, who we just talked to, the CIO at Northwestern Asset Management, had made the point that some of these beaten down groups, like small caps, have fallen so much that they probably reflect a recession that's been priced in. So even if the economic data doesn't come in as expected, they're in a position to perhaps continue to find buyers.
Yeah, I have to say it was a nice note of optimism around small caps, which there's been a lot of doom and gloom around, especially on the close. I don't know about you guys on radio, but definitely not a lot of love for small caps right now. Not so much today. Of course, small caps rallying along with everything else, about 10 seconds away from the closing bell. We're going to finish about 1.9% higher. That is the best day since April for the S&P 500. It's the same thing, too, if you take a look at the NASDAQ finishing about 1.8% higher. The Dow getting in on the action up 1.7%. And like Scarlett and I were talking about, this is ahead of a lot of risk events still to come this week.
All right, everybody. We are going to get to the gainers. I don't know if we want to. Do we want to go right to Booking and just talk about their earnings?
Do it.
Yeah, let's do it. Booking coming out. Third quarter revenue, $7.34 billion. That's a beat. 7.26 is what the street was expecting. Third quarter gross bookings, we're looking at $39.81 billion. That is a beat. $38.22 billion was the forecast. This is a great indication, whether or not people are continuing to travel, and that revenue beat is certainly catching our attention here in the after hours.
All right, I've got Paramount, which is the former CBS, the former Viacom, all put together into one nice package. Paramount Global third quarter adjusted EPS, continuing operations, 30 cents. That is 3 times what analysts had expected, which was a dime. In terms of revenue, $7.13 billion, slightly less than the consensus estimate of $7.15 billion. Continuing operations EPS, 36 cents for the quarter. Paramount right now, little change at the moment, but we'll, of course, keep an eye on that one.
Okay, I got my eyes on shares of Redfin, the company coming out and saying that third quarter adjusted EBITDA missed estimates. Estimates were for 7.74. They come in at 7.65. Revenue coming in for the third quarter just below estimates at 269 million, Katie, versus estimates of 270.5 million. In the after hours now, we're still waiting. No post-market change, actually. Unchanged in the after hours, I should note.
And we are just getting pounded with earnings right now. Let's talk about Expedia, which is also out with a number. Third quarter adjusted EPS, $5.41. That's a beat. The expectation had been for $5.01. Third quarter revenue coming in at $3.93 billion. Also a slight beat. The estimate had been for $3.87 billion. You can see shares starting to perk up right now, rising about 3% just as we adjust those numbers. I will add also Expedia coming out with a $5 billion share buyback authorization. Usually that's greeted with open arms, so we'll see how that's welcomed in the after hours.
I would say investors like it. The stock's up about 4.25% here, so that initial pop, now we're up at more than 5%. What's interesting is Booking Holdings, which had been rallying, it looks like it's now unchanged here. So we're getting a lot of movement here, I feel like, in the after hours following some of these earnings, Scarlett.
Yeah, and it's something we'll keep an eye on, of course. We're continuing. We now have a trade here for Paramount Global, up about 4% in the post-market after results. Lots of questions here about the streaming business, whether it's profitable. The company does cite progress on the path to streaming scale and profitability. Says direct-to-consumer remains on track to drive earnings improvement in 2024.
Yeah, I'm looking right now at some of these other headlines crossing from Paramount. Worth repeating. Third quarter revenue coming in just below estimates, 7.13% versus estimates of 7.15%. Third quarter adjusted EPS of continuing operations beating estimates at 30 cents. Estimates were for 10 cents, Katie.
And this is definitely a shot in the arm for Paramount, currently up about 6% after hours. You consider the fact that if you look across 2023, the stock is down 29% through today's close. So again, clearly investors finding something to like in these results after a pretty rocky year for Paramount.
Yeah, just coming back to Booking Holdings, looking for some color on the environment for Booking. The company's CEO, Glenn Fogel, talking about, we're pleased to report record quarterly room nights, gross bookings, revenue, and net income driven by a strong summer travel season. So that's backwards, guys. We are encouraged by the resilience of leisure travel demand, and we remain focused on executing against our key strategic priorities.
I will say this is a little bit of stark contrast to what we heard from Brian Chesky and the folks over at Airbnb yesterday after the market closed, given that they're understanding and concerned that there are going to be headwinds moving forward as a result of a changing economy, and people won't be traveling to the same extent that they did during a record-breaking season earlier this year.
Yeah, I'm looking at Expedia's comments too, and it like Booking, it's pretty much backwards looking, talking about record revenue, profitability, resilience of travel demand, continued improvements from executing the strategy. When you talk about executing your strategy and improvements there, that's efficiency. That's not really demand driving everything.
All right, let's go to WW International. This one has been on a tear this year, although we know that this stock is way down from some of its highs. But nonetheless, it is sinking in the after hours. The company coming out, third quarter net revenue, that's light, $214.9 million. The estimate was for $221.5 million. Third quarter EPS, 54 cents versus an estimate of 12 cents. I'm going to look for some clarification on that. End of third quarter, end of period subscribers, 4 million. It looks like it's down 2.4% quarter to quarter. So that's losing the trend lines to the downside. Third quarter net subscription revenue, $203.5 million. That is down 7.8% year over year. These are not the trend lines that you want to see. And the stock is now down 23% in the aftermarket. It's about a $6 stock.
I will say that Heather Stark, the company's CFO, in a statement saying that the company is in some cases exceeding 2023 objectives, but as anticipated, the strategic decisions to promote long-term commitment plans and to wind down our low-margin consumer products business pressured revenues in the quarter. But she's confident that they're making the right decisions to return the business to profitable growth.
Well, it seems like that is falling on deaf ears, at least at this moment. The share is down 24%. Wow. I have to say, I'm really excited to hear some of the executive commentary on the call, the analyst questions as well, because you have to imagine that this is a stock where the Ozempic effect is a big overhang.
What did you talked to Novo Nordisk's CEO? What did he say about the ripple effect across the healthcare adjacent industries and companies?
Well, I asked him specifically about when we think about some of the food, the snack makers, the retailers, whether the Ozempic effect and these concerns are overblown or whether they're right in line. And he said some of the concern is probably exaggerated. But you think about a company like Weight Watchers, and it makes more sense that that would be more of a direct line.
There would be, but it remains to be seen. There's so many unknowns out there when it comes to these weight loss drugs. To what extent is insurance actually going to cover them? Because they are so expensive. And if insurance doesn't cover them, then people won't be able to actually start to use them.
The thing is, this is a platform that, if you go back to WW, right, it's a platform that is subscription-based. And if you're losing subscribers, even though you're embracing this new strategy and these weight loss drugs, you got to scratch your head a little bit and say, like, what's going on here?
Yeah, anything that's subscription-driven right now is getting a much closer look by the consumer, who's facing higher costs for everything,
really
starting with some of the streaming. So if it hasn't been effective for you and the prices are going up, there's no downside in taking a break from it.
And I do think it's interesting just to zoom out on this earnings season, the idea that, some of these beats are being driven more by cost cutting and other such measures, efficiency measures versus actual demand. And it really feels like that's the part of the cycle that we're in. And you marry that with the fact that this market has been so punishing to those that miss expectations. And all of this just sets us up for Apple.
All right. We also have Live Nation in the meantime as we await Apple. Live Nation's third quarter revenue, $8.15 billion. Analysts were looking for just under $7 $11 billion. So that is more than a $1.15 billion beat.
Thank you, Taylor
over the
Swift.
estimates.
Can we just say it?
And Beyonce, right?
Well, you know
Yeah.
what they say in the press release. Today we delivered our strongest quarter ever and are on pace for a record 2023. And they talk about the acceleration of growth in the live entertainment industry. I'm looking to see if they say, Taylor, I don't see it yet.
Well, I'm
key
sure it's going to
women
come up.
risks.
Yeah, I'm sure it's going to come up in the earnings
Careful,
call, right?
she might write a song about you.
By the way, the adjusted operating income for Live Nation in the third quarter, $836.1 million. Analysts were looking for $709 million.
All right, we've got Live Nation. It is up about 3% in the after hours. Weight Watchers down about 18%. And we've got Coinbase just crossing third quarter revenue, $674.1 million. That's better than the forecast, Katie. 654.7 was what the street was expecting.
Yeah, going to be interesting to parse into those numbers. Of course, Coinbase, we were expecting to see some color around lower trading volumes, but you take a look at least at revenue and it's a beat.
All right, guys. And of course, we're waiting for Apple, which should come out at 4:30 Wall Street time, looking to see any movement in the after hours, just up a hair. But we'll be breaking that down, I know, just as you guys will.
T-minus 12 minutes, right?
Tick, tick, tick.
Who's
yes.
counting, though?
We all are. All right, that's a wrap. Our cross-platform coverage, lots of earnings on this Thursday. Join us again tomorrow, radio, TV, YouTube, and of course, Bloomberg Originals. We're tracking the markets for you.